Hello to the hockey family. It is Monday, March the 9th. Very nice weekend here in Charleston, South Carolina.
Really nice.
Okay. It's like the weather has turned.
It's beautiful.
Yeah. It's like in the 70s every day. Just want to rub that in.
Fahrenheit to your
Yeah.
mom and dad won't know what that means.
Yeah. I actually looked at my thermostat this morning and they had changed it to Celsius.
They're not visiting here.
Yeah. They're down visiting. So my folks have been in town almost 2 weeks. They leave Wednesday. Be a bit of a shock going back to Saskatchewan, but again, great weekend. We took him on a carriage tour Saturday, and then took him for a little beach day yesterday. So giving the tour of the land. It's been good, and obviously they got to take in soccer practice number 2.
Boys were buzzing around on Saturday.
Yeah, sure.
Didn't have to sit too many kids out for disciplinary reason. That was good.
Yeah, it's interesting, definitely at that age, but should be a fun season.
Yeah.
Going back to it, Friday, obviously we had the trade deadline. They're always kind of, leading up to the trade deadline, so much going on. I would say it was a fairly active deadline with some, decent sized deals, and you see which teams are really taking a crack at it, but it's kind of neat now, just down the stretch.
Down the stretch, and
go.
everyone, I know, gives a little sense of peace to know where you're going to be the rest of the year.
Yeah, it's stressful leading into it. So everybody's set up, and the West is kind of crazy.
Sure is.
One division.
Central's crazy.
Yeah, that's so. And then going on markets, really, it's been kind of a crazy time in the markets as well.
Yeah,
not crazy.
Yeah, not crazy, but it is. Well, and I think again, like our human brains, like we're so prone to recency bias, right? It's like, but for a good stretch there was so little volatility in markets, and that's not the norm.
No.
Yeah, like that's not the norm. But when you get a stretch like that where things are so calm for so long, it can play with your head a little bit. So markets, I mean, really not like a huge move, right? So moving maybe 3 to 4% off the highs, which shouldn't be shocking at all, right? So of course the Iranian conflict war deepening a bit here, and at the end of the day, at least as of now, like oil is the real story here for markets, right? So priced in US dollars, just 10 days ago, call it, you had a barrel of oil at about $60, kind of mid 60s, and conflict starts, war starts, whatever, and in the middle of last night, like it had doubled, right? It had gone from $60 a barrel to 120 USD, like in 10 days, right? And now the action today's been interesting. So it's pulled all the way back from $120 a barrel to like mid 90s last I looked. So it just kind of goes how to show how volatile oil can be. But it got me thinking from an educational standpoint, like just the basics, like why does the price of oil matter so much for stocks? And we've also been over this a bit, but again, just as a reminder, like when you own stocks or like a globally diversified basket of stocks, like what do you actually own? Right. So you as a shareholder, you have a fractional claim to the cash flows and profits of those businesses. Right. And so the real test becomes like when anything happens, geopolitical, if there's a government shutdown, like at the end of the day, you want to ask yourself the question, does fill in the blank event, is it going to impact the cash flows and profits of the biggest and best businesses in the world, right? Yeah. And a lot of times it doesn't. But for oil, when you see a shock like this, given the concerns about supply in the Middle East, and you see the price of oil go from $60 to $100 a barrel, the concern there for equities is, for many businesses, oil is one of the primary input costs into their business models, right? So I just wrote down like a couple of very obvious ones, but consider a business in transportation, manufacturing, chemicals, agriculture, airlines, shipping, even like these data centers these days. Like the price of oil, like companies need to pay for a lot of oil to run their businesses. And unless said businesses are able to increase prices to pass the increased cost to consumers, like margins get squeezed, right? Revenues minus your costs, you have profits, right? And so when you hear about margins getting squeezed, like that, there's just less profit if you have to pay more for the oil to run your business. So like that's a concern. And then at the consumer level, a really easy one to understand is just higher gas prices, right? Cost of oil goes up, like, and you'll see that at the pumps here in most of the world, higher gas prices. But really, like in my eyes, like the biggest concern actually ties back to the first point. If companies have enough demand where they start increasing their top line prices to pass through those costs, well, now we're talking about inflation again, right? And nobody wants to see what we saw in 2022, or rewind the clock back like late 70s, early 1980s, like that kind of inflation. So we'll see. We'll see. Also, like the jobs number in the U.S. wasn't good last month either. U.S. dollar getting a lot stronger, which I guess that might be a silver lining to some that had concerns about that. So yeah, it'll be interesting, and I guess maybe a little encouraging to see that that the price of oil pull back a little bit here, which is so. But again, just a little volatility. Again, that's the norm.
Yeah,
that's the norm.
we saw it. Like markets opened a little lower this morning, but then kind of climbed back, right?
Yeah, yeah,
We'll see. All right. Well, like we said, trade deadline's over. That's home stretch.
Home stretch.
Already excited for some playoffs, and helping guys up. Good tax deadline coming up in a month.
Yeah, communicating with a lot of CPAs right now on taxes.
Yeah.
And probably get on the road a bit here at the end of the season, and should be fun.
Fun time here.
Hope everyone has a great week. We'll talk to you soon.